Ladies and gentlemen, a big hello and a very warm welcome to yet another high-impact Leaders of Tomorrow eForum. The going is getting tough and the situation at hand is playing havoc with the economy and businesses globally. This has severely impacted the ability of SMEs to access both short-term and long-term financing. As the scale of the economic impact continues to grow, SMEs are increasingly finding themselves in a tough spot. The current pandemic will see the world of business financing increasingly evolve beyond traditional bank-based borrowing. The government's credit guarantee scheme is in full throttle and efforts are underway to help MSMEs recover from a deep coronavirus-induced slowdown. Now, among the notable measures as part of the government's 20 lakh crore rupees relief package is the announcement of the 3 lakh crore collateral-free loans, 20,000 crore rupees of subordinate debt, and of course, changing the definitions of MSMEs per se. The credit guarantee scheme for struggling small businesses comes with the promise of cash flow and liquidity infusion, and there is no debate about it. But while such schemes are high on interest subsidy, are they perhaps equally low on flexibility and transparency? Today's eForum does a deep dive on just that. And with that, let me introduce to you the luminaries who will be joining me on this eForum. Ashishkumar Chauhan, Managing Director and CEO, BSC. Anjali Bansal, Founder, Avaana Capital. Anil, Bhardwaj, Secretary General, FISME. TR Bajalia, Board Member, India SME Forum, and former Deputy Managing Director, SIDBI. And last but not the least, Madan, Sabnavis, Chief Economist at CARE Ratings. Thank you so much, ladies and gentlemen. Truly a pleasure having you with us to discuss this very, very pertinent issue. First, I'd like your headline views on the scheme, the tweaks the government has made along with the RBI, and what is your assessment of the on-ground efficacy of the scheme in terms of the MSME or SME uptake of it?
The MSME sector is a critical, vital part of the Indian economy, contributes about 45% of India's total manufacturing output, 30% of India's GDP, close to 80% of organized employment, and a lot of the unorganized employment as well. We all know that this is one segment that in some ways had been slow to digitalize and has been particularly badly impacted by the COVID resultant lockdown. The move by government to announce the credit guarantee scheme is a very welcome one. It serves, I think, two purposes. One is a very positive signal that this is a credit-worthy segment. It encourages lenders to recommence the lending activity to the segment as well. The second is actually create more of liquidity that may become available to the segment. What we have not yet seen, though, is the volume of uptake, and we can discuss today whether that is really on the demand side or the supply side. There are constraints on both. And when I say demand and supply, I'm talking about capital here. There are constraints at both ends and there are challenges at both ends. Well, but certainly the fact that you have this 3 lakh crore pool in some ways available, it's about 17% of the total out credit for MSMEs, is a very welcome move.
Let me take it to you, Mr. Chauhan, and your efforts at BSC with the launch of the SME exchange, and of course your expertise of tracking this very, very critical sector in terms of the efficacy of stimulating demand in the economy. And of course, from an MSME standpoint, how they are viewing, the lens that they're viewing this package from, and has there been any real so-called positive sentiment from this sector where they feel relieved and they feel that, yes, the wheels are churning slowly, albeit, but churning, of course?
In some ways, in democracies, nothing happens without crisis. You shouldn't waste any crisis. So that's what the government did. They ended up creating a very beautiful way to restructure the entire definition of SME. The SME framework itself is very old, and it was largely manufacturing driven. How much money you have invested into the plant and machinery, that is how we used to define the SMEs. And suddenly, in one stroke, now we have a single definition of SME. And I think that is a huge reform, which many of us have not appreciated yet. The second part is that we were all wondering how to reach the credit to the SMEs, because even in normal times, the banks are not willing to give money to SMEs, even despite all the guarantees and other things. And they consider the SMEs and even micro people as basically people who are not that disciplined, who can't give the sort of information they require to do their paperwork every day or every month and so on and so forth. But that is the only channel we have available. If we had to develop a new channel those days, I think it would have been very, very difficult because everyone is locked down and you could not have done it anyway in a short time. So we had to basically go with the banking channel only. And this credit enhancement using the pooled mechanism is unbelievably good in a sense that they have taken care that anyone, if you, as a banker, if you lend to going forward, 3 lakh crore, the government is going to, in a way, guarantee. And for me, that was a brilliant move. Somewhere on the line, I think totally, as of July end 2020, they have already sanctioned almost 1,36,000 crore rupees out of that 3 lakh crore rupees. But currently, I think this was the only way to do it. The other side of it was also very interesting because your topic is very provoking. Should you take the money or not? And if you take the money, then will you become slaves or not? That kind of approach is coming. But for me, when you have nothing in March, you had nothing there, right? In April, you had nothing. People were actually looking at a very stark situation. And suddenly you have a tap opening, 3 lakh crore is a pretty large number, especially for SMEs. And of course, it can be increased later on. And that's where, for me, if you had asked me the same question in April or May or June, we would have told you that 3 lakh crore is unbelievably good for SME specifically. And now when it is in my pocket, or at least half of it, now I say, this is not enough, or you are trying to make me, enslave me. No. For me, it is the other way around, that somewhere on the line, the government has its own fiscal constraints. The banking system itself has its own constraints because the same people who are borrowing are not able to repay. And the other thing you need to worry about is which sector will survive well. For me, the way it has come out is brilliant in terms of this entire framework. And these policy instruments are blunt instruments. They cannot be fine-tuned to for your own requirement or my own requirement. Because I may require tea at a particular 39 degrees and you may require tea at 37.999 degrees. Those kind of things will not happen. The fine-tuning cannot happen on such large instruments. But overall, I think the amount of money that is pumped in is unbelievable. Even the RBI's sort of releasing of tap, as they call it, has been also phenomenal. 5% of GDP has come in terms of the new money created. And of course, the foreign exchange has come in so much that you will basically be awash in liquidity. And probably that's why inflation is going up. But effectively for me, the SMEs, this is the maximum that could have been done. And the government seems to be willing to open up more taps specifically for MSME, given the fact that they provide the maximum number of jobs.
Well, Mr. Chauhan, it's clear that with your critique, you have given the government A+ report card. Let me now go on to Mr. Bhardwaj to get his viewpoint on whether what has been done from an intention standpoint to an actual mapping it to what's actually tracking on ground. Would you say that the report card is A++, just like Mr. Chauhan has rated it?
What we need to remember is that this mega scheme of 3 lakh crore rupees guarantee catered to a very small segment of this universe. The segment was that those MSME units that had access to institutional funds on a specific date, that is 29th of February, number one. 5 to 7% of the MSME sector has access to institutional funds. So 95% are not affected by this scheme. Secondly, on 29th of February, whatever was outstanding, so even if you had a credit of 1 crore rupees, 80 lakh rupees you had paid, 20 lakh was outstanding. So what you get is 20% of that outstanding amount. So that is 4 lakh. These are certain ground realities. So it is not such a scheme that has affected positively majority of MSMEs. No. It has affected positively to a very small segment of medium enterprises. But at the same time, MSME units that had access to institutional funds meant that they were the organized segment of MSMEs. They were definitely contributing a little more to employment, to supply chains and so on. So I think their global effect would have been much higher if this scheme was not available. To that extent, surely it has affected positively. But let's see that of 3 lakh crore guarantee, we have only reached half percentage marks, and we are finding it difficult to push beyond a point. So now we are expanding its eligible borrowers. So we have now included not just the MSMEs, but chartered accountants and professionals and lawyers, etc., which in a sense shows that the uplift has not been as much as was perhaps expected. So these are ground realities. Apart from that, let me also tell you that when lockdown was announced, issue was of solvency. The major problem was of solvency, because suddenly your inflow was completely freezed, but your fixed expenses remained same. So salaries were to be paid, electricity bill was to be paid, etc. But there was no income. So immediately within a month or so, it became very clear that this crisis, which was a crisis of liquidity, is turning into a crisis of solvency. So another scheme that was needed, and we continue to have dialogue with government, especially different arms, the Ministry of MSME, Finance, and IBBI, Insolvency and Bankruptcy Board, and they have created a scheme for stressed MSMEs which might be needing assistance to either restructure themselves or file for insolvency. I hope that this scheme would become public soon, and many MSMEs which are affected would be able to take advantage of that.
Mr. Bajalia, as a board member of the SME Forum, would you say today the takers of this grand package, which is very well intentioned by the government, has somewhat left a lot to be desired? Because a lot of research that has been conducted seems to suggest that there are not that many takers for the scheme, and there might be several reasons for it. One is actually understanding of what that scheme is. B is in terms of actual visibility and awareness of that scheme's existence. And C, of course, would be the entire paperwork and documentation required for small players to avail of that.
First, we should be aware that the SME which we are talking, that is only 10%, because 90% SMEs, they don't get loan from the banks or NBFC, so they are in the unorganized sector. So these facilities which are getting extended, these are only to the existing unit who are with the banks, financial institutions and NBFC. So major part is excluded from this. Most of the SMEs, if we see, they were granted the moratorium. First they were given the 3 months moratorium, and then subsequently again they were given the 3 months moratorium. Total, if we take that, 65% of the total exposure of the banking industry has been given the moratorium, out of which public sector banks, they have almost given 81% of their portfolio, and the small banks, they have given 90% of their accounts and 52% of their portfolio. So this moratorium also has helped the existing units, plus this 3 lakh crore has helped this unit. But you see that the utilization is only 1,37,000 crores, out of which 92,000 crores have been disbursed. And this is automatic loan, that all the SMEs, whatever exposure was there on that particular date, 20% of that banks have to give. So banks, whatever the cases were viable or which were available with the banks, which were not in defaults, they have already given those 20% of that. As Mr. Bhardwaj indicated, that most of the good SMEs, when this COVID started, instead of bearing the cost of the interest, they deposited in their working capital accounts or reduced their exposure. Their exposure came down, and now on that particular date, when they are calculating the 20%, it is a very small amount because they have reduced to the minimum. So they are not getting the benefit. Now another scheme of restructuring has come. I think this restructuring scheme for long term, it will help some of the SMEs which were standard as of March 1st, 2020. Here, total exposure expected, that I was reading some study, that total 2 lakh crore is the exposure of all the corporates, less than 500 crores. So this will go to them. Despite all these factors, banks are very, very risk averse. Despite lot of liquidity in the market, growth in the deposits, they are taking the additional exposure very, very cautiously, and they are not financing that way.
I'm assuming you're saying that, yes, the on-ground reality leaves a lot to be desired. Let me go to Madan Sabnavis, who, the Economist is going to put this in perspective because you could look at it through very, very objective lens. These great noble ideals actually reaching on ground and helping the MSME sector. Would you say 5 months down the line, today MSMEs are feeling a lot more confident about their survival, or would you say the shutting of shop is happening at a speedy process?
Okay, if you look at this entire picture, let's look at the SMEs. I think we first had demonetization, then we had GST, and then we've had this lockdown. And in these three episodes, we have seen that the one segment which has gotten impacted very, very negatively has been the SME segment. We keep talking to bankers. I think bankers have always been reluctant to lend to the SMEs, saying that, look, this is high risk. In between also, we have had this restructuring which came because of RBI and the government talking, saying that you bring about a restructuring exercise. So the banks were doing it because they had no other option. But otherwise, given a chance, they will say that, look, we do not want to lend where the NPA probability is high. So under these conditions, I think if I look at this credit guarantee scheme, I think it's an excellent scheme from the government, because the only way you can get the banks to lend is if you say that I'm giving you a credit guarantee. And in fact, if you look at what other governments have done, the European countries, especially for the SMEs, I think lots of them have been giving this kind of a guarantee. So I think this is a good thing which the government picked up, and therefore we need a guarantee to make sure that SMEs are able to get these financing. Of course, at ground level, as the other co-panelists have said, I think it's a very small segment and that's something we have to live with. So either we go without it or with it. So we're going with it. Some people are going to benefit. It's obviously a positive thing. But I think the more fundamental question as an economist which worries us is that when an SME is taking a loan from a bank, is it meant for growth or is it meant for survival? So if it's meant for growth, I think then definitely it's good. There'll be one section, maybe this 10% of SMEs which we're talking of, which would actually get funds, which would be allowing them to grow, survive, and probably get onto the accelerated path at some point of time. But our sense is that what's happening is most of them are taking these funds for the sake of survival. So again, we do talk to SMEs as a rating agency, and what's the kind of feedback we get? They say, look, our major problem is on the demand side. We have this case of a lockdown. We have this crazy system of saying that today we say unlock and tomorrow there's a localized lockdown. What happens to my production? I can't get my labor back. I have all kinds of problems. So today when I'm not sure if I'm able to produce my good or service, it doesn't make sense for me to go and borrow money from banks. So I think unless we're able to take care of that particular piece, only then can we be confident that this money which we're giving to the banks, to the SMEs, which of course is very useful, is actually going to bring about some kind of a delta in their performance and they'll feel better. Otherwise, the other part of this, what you've titled this particular program, if I'm not able to repay these loans, again, there will be this NPA conundrum where, of course, the government and RBI are talking in terms of another restructuring exercise, but I always believe restructuring is deferring not the problem. At some point of time, you should be in a position to say that I'm growing, I can earn money, and I can service my debt.
The fact that, yes, we are looking at survival, I think 99% of people seeking loans are just looking to survive this phase. Whether they will or not, is the jury's out on that, but we're fast seeing a lot of them collapsing. That's also been witnessed in the last 5 months or so, which brings us to the next question, and I'm shifting gears here and deep diving, saying, what would you say if you are advising an MSME who is a very, very cash starved, can avail of the loan, but that loan is no free lunch? I'm not particularly sure if industry is robust enough that even if they're operational, they're able to meet demands and or create demand or actually go back to levels of, let's say, even pre-COVID, which were not that attractive. How does that vicious cycle of being so debt-ridden as a complete sector then take on in terms of health?
It's a very complex issue, right? So let me take one end of it at least, and then there are many other folks here who will also opine. So see, credit or a loan, at the heart of it is something that has to be repaid. It has to be serviced and it has to be given back. And in order to do that, the borrower needs to have the health and hence the continuing ability to repay. We've talked, and everyone here has mentioned the offtake has been low, lenders are not lending. Why are lenders not lending? Because historically the segment has not necessarily been a great credit risk. And there have been many cycles and NPAs that have emerged from this segment and so on. So I think there is a more fundamental intervention that is required in addition to the credit. So opening up of the credit window is very welcome, as I had mentioned earlier. But in addition to that, there is a need for formalization in this segment. And the one trend I have seen across the board during COVID has that been of acceleration of digital adoption. So segments like MSME and even agri and so on that have been historically very slow to embrace digitization now see no option but to do so. I'm conscious I'm not addressing your question of growth versus survival. You have to survive to eventually grow. So right now you have to survive. And I hear this from a lot of fintechs that are lending, that are continuing to lend. They're saying that, in fact, some of their borrowers are not availing of the moratorium because they are planning to survive. They're saying, if I avail of the moratorium, I'm only pushing the problem out. There is a compounding of interest that takes place. And so I will do my absolute best. I will cut down my cost. I will free up cash flow, and I will not avail of the moratorium. So we are also seeing that kind of behavior. So the big question here, in addition to everything else, is schemes like this, they should not prove to be an adverse incentive.
Are we now heading to the next stage of a possible issue, crisis at hand?
Economy had come to the stop on March 23rd. It was over, done, finished. In a sense, the entire vehicle had come to close. Now, if you have to go and drive it on fifth gear, it won't be possible. It will not even start. You have to go to the first gear, give them some money, then some of them will go to second gear, third gear, and so on and so forth. Some companies may be into the situation even before the COVID happened, so they may not survive. And still, once you create a policy, you'll have to give whatever is required to everyone, right? You can't be sort of making decisions even on a sub-level basis. But on the other side, give the growth capital, which was also discussed even in April, May, about how do we bring the growth capital available to the industry, especially SME. And there are two ways which Indian governments have been forced to do. One is what I call most popular, is the subsidy part of it. Distribute money not to be given back, which is what all of us like, right? We have loan melas and don't come back, just take this money. And if you take the money, again, we can force the banks to also not take it back. And that's what we want them to do. But basically, this was discussed that we need to have basically a subsidy framework or some other way to do things so that people become a little more responsible.
How can an MSME survive this crisis when this government-backed credit guarantee are being offered at a very high rate of interest if taken from an NBFC? I have taken a loan from an NBFC and the ROI on that is 11%, but now the NBFC is offering me 14% in the above said program. So this scheme to support MSMEs like us is to support us or really rob us. Secondly, I have opted for the moratorium for 3 months starting April to June 2020. Now my profile is being considered poor while I've paid all my EMIs on time to my loan provider in the past.
Let me first start with why the priority is given to the MSME sector. You see this, I was listening that SME sector attracts the priority because this is a sector which provides almost 30% of GDP. It provides almost 12 crore of employment. It generates the new entrepreneurs, and this is the bed for the new innovations. This sector actually is based for supplying material to the large units, is the ancillary units these are, or they are in exports. Almost 40% of the exports come from SME sector. And they do a balanced regional development. That's why every government, they have to prioritize the SME sector. They can't ignore it. Now, this credit guarantee scheme, you see this, the original credit guarantee scheme, which SIDBI has announced 20 years before. That scheme provides that you can avail the cover, guarantee cover, only if you charge the interest rate at 3% above your MCLR. So most of the NBFCs, they are not covering that. Now this 3 lakh crore rupees, here again, there is a cap on the interest rate. State Bank is charging 9.25. Most of the banks are charging around 9.5 to 9.25. MSME generally, they charge their own rates, but I think if they charge very high rate, they will not get the guarantee cover. So the major question for SME is the cost of borrowings. Their cost of borrowing is always very high. Further, when they supply the material to the large units, they get their dues after 2 months or more than 2 months. Again, their costs go up. So there is a vicious circle. They don't get the sufficient funds to run the units. Always they are in shortage of the funds. When they get the bigger order, they don't have the funds. Then they have to reduce the order. Every time they live from hand to mouth. This is the reason why most of the SME segments are not growing at the fast rate. If they get the working capital at a reasonable level, at the optimum level, SME units, definitely they will grow very fast. But the main concern is the finance. They don't get the finance. Working capital, you see this, if a company sanction the working capital, immediately he gets some big orders, he again goes to the banks, bank says, no, we have just renewed your working capital, we have given you additional, so now come after 1 year. So till 1 year he will not get from any other banks, because if he goes to other banks, they will ask for very higher interest rate, they will ask for security which is not available with that person. So they suffer that way. Then he will go to the private or this NBFC who charge, some of the NBFC even charge 20%, 22%, 23%, generally 70, 80, 18% is the normal rate. So they suffer from very high cost of the funds. To survive under these circumstances, I think there has to be cap on the interest rate. While the banks are charging 9.25 or 9.5, perhaps maybe these NBFC, if they charge whatever their cost of borrowing is there, some 2% above their cost of borrowing, like it is done for the MFIs, where they cap that how much they can charge. So perhaps I think with that cap, this may happen. But they have to pay the salaries, whether work is going on or not. They have to meet their other expenditure, fixed expenditure. So this 20% which has come at the outstanding as on a particular date, it is not helping them that much. Now that fund of 50,000 crore, it is a long term. It will take at least 3-4 years to mature. Then subordinate debt, which is again 20,000, which has started. There again, it has not been still mean, it is at the table stage when it is going to be disbursed and what will be the mechanism, that is still happening. NBFC, they are not financing any SMEs. They are also today just wait and watch policy. They are adopting their policy. So it is difficult for SMEs.
Madan, Sabnavis, if you could, basically gather all of what has been said, and of course what has been said over the last 5 months, and tell us, according to the script, how do you see this unfolding, over the next 4 or 5 months? What do you see as an economist happening, and what shape and form are we, looking at in the future, let's say come December?
So actually, there are a couple of things here. I think the first thing is that it's very important for us to take a view on how long this lockdown is going to last, because I think as long as we have this lockdown, I think the prospects for the MSMEs in terms of their own prospects of their own performance there's going to be a big question mark out there. Now, as far as the loans are concerned, I think as long as this 3 lakh crores number is there, I'm not quite sure. After hearing the other experts, you get to know that there's not too much of scope for you to even reach that 3 lakh crores. So I think the important thing is how do we balance the interests of banks along with the SMEs, and will the banks actually tend to go back to normalcy in terms of lending to SMEs once the credit guarantee really goes? I think we are going to go back to the same old story which played earlier. I think banks' reluctance is going to remain as long as the MSMEs don't perform. And MSMEs cannot perform unless we have this lockdown coming to an end with more certainty in terms of the operations. So what we can really see is that we are all expecting the economy to degrow this year. It's going to be a bad fall for us, maybe minus 5, minus 6.5% growth. And if growth is down, I don't think companies will be in a position to service the debt. And we've already seen the Q1 results show sharp fall in sales, sharp fall in profits, interest cover ratio falling sharp. This is the kind of a scenario which we have. So it's going to be a very, very grim year for us today, especially for the SMEs. And we've seen 60% of SME loans already under moratorium. There will be restructuring coming in course of time. But at the end of the year, at the end of the day, I mean, as and when we get back to normalcy, there's going to be a huge pile of NPAs in all segments, including your personal as well as the SMEs. So it's going to be a very grim picture as far as the banking sector is concerned.
You want to respond to that, Mr. Chauhan?
I think there is a case, as he said, in certain cases like this, as I told you, the economy had come to a standstill, and then you go to the first gear and then you go to second gear. So whatever has been done is not bad. And the way I look at it is, going forward, what needs to be done still remains to be seen, because what we are trying to do is to discuss halfway into the COVID situation. We are trying to, in a way, internationally, the amount of liquidity that has gone in, almost more than $12 trillion, is telling you that we are trying to solve a healthcare problem by pumping in liquidity. or pumping in many other things. Till the time the healthcare issue remains, whatever we do now, whichever company we think will survive now, you never know after 5 months if this thing continues more, whether they will have chance or not. And so that's why I kind of agree with Mr. Sabnavis that the situation is not very good, but the government has done a great job in terms of whatever they could. They are again in a fiscally tight corner. They are not kind of rich people who can be profligate, who can afford to be profligate. They have tried to maintain a balance, and we as children also have to understand that the father has only so much of income and so much assets. If we keep on taking away all of them and say that borrow and give me, I don't know what will father do, right? So that is where I think all of us have to be mature and understand, rather than saying, no, you are father, so you have to fulfill your stuff, which we think is your duty. We will, or we may not fulfill our duty, and those kind of things. To some extent, whenever the economic cycle goes bad, the larger companies actually end up eating the working capital of the smaller companies. Absolutely. Instead of a credit cycle being 60 days, it becomes 120 days, 180 days. And so we may think the larger companies are actually running efficiently or on a negative working capital. It's the entire problem comes onto the SME sector. And those are the things I think government is trying to resolve by this trades mechanism, by giving that law where you have to pay within 45 days the bills and things like that. Also, I have seen some of the larger companies telling the smaller companies saying, I will pay you this, but I will put a larger order on you. You sort of fulfill that, then only I'll pay the money of the past. So effectively, that guy's working capital gets stuck even otherwise in a larger and larger cycle, right? So somewhere we need to also ensure that the SMEs are able to get their working capital back from the larger companies, especially governments and PSUs. I think in some ways government is trying to resolve that. How far they will be successful, I don't know, but probably the SME experts will have a better view on that.
If I had to take Mr. Chauhan's point forward and use the metaphor he's using, which is, the father has done his duty to the best of his ability, and now the children have to manage, right? My question is, what would your advice be, Anjali, to those children who are, taking some money and some not and starving? What would your advice be? Take the money or not take the money? And if you've taken the money, what do you do about it to ensure that you don't become suicidal because you're debt ridden?
So while I agree with Ashish on many, many things generally, I do not think that one should look at the state or government as a parent. MSMEs, any business is a business. They are obligated to run efficiently. If they're borrowing, repay their lenders. If they're taking equity, give a return on it. So it cannot be a parental relationship and thus an expectation. So Ashish, I come back to agreeing with you that this expectation that government should dole out all the time is probably a little bit unfair. And whether you're taking money from your father or from your mother, as is often the case, need not be father only, but that is still an obligation to repay. So I would put it at that. I think COVID has come, this COVID crisis has really come when we were on a journey of formalization overall. So I've mentioned this before, MSME, the entire sector has been largely informal, slow to digitize, slow to formalize, and not saying that it is intentional and so no judgment around it, but just hasn't really moved along the formalization and particularly the digital spectrum. So if any good comes out of COVID, is the acceleration of that and the formalization of this segment. I think it will make the segment also more credit worthy, create more confidence in lenders, whether they are banks or NBFCs, bring down credit risk and hence the cost of credit itself. So that's where I would actually want to end on a more optimistic note. The crisis is real. This segment is in extreme pain. So we cannot wish away or deny that pain at all. It requires a lot of support. Some of it is financial through credit schemes of the government, but some of it has to come through, I think, the good offices of so many experts here in helping this segment formalize a little bit more. But first to survive and then to thrive.
Mr. Bajalia, Mr. Bhardwaj, you'll have your ears close to the ground when it comes to this sector specifically. What would, both of you want to highlight, and summarize before I let all of you go, in terms of, even though I might displease Mr. Chauhan by saying this, expectation from the government, in terms of, what you're gathering from the on ground, and of course, what would be the advice you would dispense to a large number of MSMEs? Let me tell you, most of the current questions and statements and observations that have come is the fact that they're not able to get funding, that they're struggling for funding. That seems to be the chorus, at least, for with all the participants here. That might echo the larger sentiment as well. My point is, what would your advice be to them?
I feel that if we find that the child is intelligent, he is going to be excellent. So we must support him, because we feel that after years he will come back and pay me and he will earn more. So he needs the support at time. Perhaps we need to give that. I feel that government has definitely given adequate package. Even fund of funds will get another 2 lakh crore rupees of equity fund, which will go to the new entrepreneurs or whosoever is going to the SME even listing. That will help a lot. Subordinate debt also will help these SMEs. Now we have to see that over a period of time, that how this money is going to be utilized, how restructuring happens, and ultimately restructuring has to happen only for the viable units. The unit which are going in future within a period of 3 to 5 years, they are going to repay along with the interest. So only they will get the restructuring. Restructuring is not automatic that anybody coming, he will get the restructuring. So that will happen. And we are from SME, I think we feel that SME is the backbone of the country, as it is said. I feel they will emerge very strong. They will come out strong. They will help the country to grow faster and become healthier. So we feel that if they need the help, perhaps this is the time we help them, and we are not giving it as a charity. We want this money to come back, and this money definitely will come back. If we see the NPAs of the earlier, this last year's figures, these large units, their NPAs were 17%, while SMEs were just around 9 to 10%. So this way, I feel SMEs, these new entrepreneurs, young entrepreneurs who are coming, they are very aggressive, very innovative, and the products which we need, and the focus of Make in India, which we have to be the Atmanirbhar. So this is the only sector which can make us Atmanirbhar. So I think if they need the support at this moment, definitely we should support them. But this money will come back along with the interest.
Great. I mean, let's hope all of that actually works out. I'll let you, have the last word, Mr. Bhardwaj, before I close and thank all my panelists, including you.
Well, MSMEs are the products of their environment, and they don't shape environment, but they are the product of the environment. So I think what is important, we are not expecting as a sector loans to be given to us, or some schemes so that money could be given. I think what is needed is that we see that a government could take this as an opportunity to reform itself and improve the environment, improve the quality of the air and water, so that they can find devices to grow. There are a couple of things that we expect. Number one is public procurement. You know that the quantum of public procurement in India is approximately 1/3 of India's GDP. So if $2 trillion is in dollar terms India's GDP, we are talking about approximately $700 billion. This is kind of purchase governments have done, which are absolutely wasteful. They encourage poor quality product, unscrupulous manufacturers, and so on and so forth. If we could improve that, there is no money. Money is to be saved actually. If we improve that, we would be able to save a couple of hundreds of billions of dollars. Secondly, judicial reforms, legal and judicial reforms, improving the quality of law and reducing the number, but improving justice. You know, the problem today is that buck seems to stop nowhere. You know, it has become a ping pong ball between the government, the executive, and the judiciary. And that is why the big time investment is not coming in India. Because nobody wants, you know what has happened in the case of telecom. You have seen what has happened in the case of coal. 2G, etc., where it has become a ping pong between executive and judiciary. So these are the areas where money is not the thing, but we need to show the visionary leadership to affect these reforms.
So just two quick things. Yeah, one, this whole issue of saying whether we should be looking up to the government, I think the answer is yes, because we're saying more than COVID, I think the lockdown has been responsible for all the suffering of industry. Now, whether it was a right move or wrong move, I think it's a different kind of a debate which we can have. But I think governments all over the world have a responsibility for addressing issues of enterprise because they have brought about this calamity. Just like we said, demonetization, GST were policies. Maybe one didn't work, one worked well, whichever way it is. But if there are enterprises which are affected negatively, we definitely need to address it. I think it's a primary responsibility of the government in terms of having appropriate policy. Now, just the second point is that I think this SME giving this credit guarantee, I think it's a very good idea for the government to also extend it to other sectors. Because we have the realty sector, we also have the automobile sector, which are having similar kind of problems. And I think we could actually extend this kind of scheme even to these sectors. I think that would be a good way going forward.
Fair enough. Heard both, the positive and, the not so positive. But hopefully, as always, we'll strive hard and hopefully emerge out of this stronger with minimal casualties. That's the hope and that's the prayer. But on that note, thank you so much, ladies and gentlemen. Truly a pleasure having you on this high impact eForum. Thank you so much once again.